Welcome everybody to our IASeminars webinar. I'm delighted to welcome Frank Beil, who's one of our new lecturers at IASeminars. Frank actually is a senior lecturer in accounting and adjunct professor of management in the Carlson School of Management in the University of Minnesota, so we're very glad to have him. Frank, you've authored so much, and I can't even list it all here. It's insane how much you've authored. So I think people will get a lot out of this session. Before we start properly and I hand over to you, Frank, I'd just like to do a bit of housekeeping.
Okay.
People will be aware that when we advertised the webinar that we would be awarding 1 hour of CPE certification. Because of a requirement from our accreditors, we're required to ask 3 questions of you throughout the hour, and they'll be at random intervals. We don't care whether you get that questions right or wrong. In fact, I think one of the questions at least is not a case of being right or wrong. So if you are interested in getting your CPE 1 hour certified, then do please answer those questions. Even if you're not sure of the answer, just put something down. And that will help us enormously. And then sometime after the webinar is finished, we will process all of that and send out certificates to those that participated. But other than that, I'd just now like to hand over to you, Frank. Thanks very much.
All right. Thank you, Peter. All right. So the webinar is the blockchain, as I like to call it, bringing accounting and finance into the digital world. Right. So it's primarily about the blockchain. All right. So here's the table of content. So we're going to cover these 4 things. So the first one, what is the blockchain? Because it's kind of although a lot of companies use it, they tend to use it in parts. Right. So the idea in this seminar is you can use it for your entire accounting information system. And then the second one, how does the blockchain work and how does it enhance business and organizational decision making, including and then there's a small section on smart contracts. The purpose of accounting is to aid the decision maker to make the decisions using reliable data, right? And accounting is the language of business, right? So once we have something like the blockchain, I mean, it's just really, I don't consider blockchain, I don't consider it evolutionary. It's revolution. It's revolutionary. So it's really quite something. All right, and so why is it compelling, right? And then on the last one, we'll calculate the return on investment on blockchain. All right, so the first one we do here is the fundamentals of blockchain, but there will be a polling question.
So we're interested here in where you are on your blockchain journey. So you should see the poll pop up on your screen now. So do just let us know where you and your organization are in your blockchain journey, because we're actually quite curious where people are in the adoption of blockchain. Seeing a good few results coming in. That's great to see. We'll just give you, say, 10 more seconds to answer, and then I'll close down the poll. 3, 2, 1. There we go. Frank, do you want me to share the results of that poll? I see everybody's really at the beginning of their blockchain journey, is how it can be summarized.
That's great. All right. All right. So now we're going to get into kind of the purpose here. I like to call it fit for purpose. right? So the purpose of accounting is, of course, right, is to utilize it as a primary, right? In fact, it's sometimes the only, right? You know, there's always way to interpret things, but essentially it's the accounting. And what you have with the blockchain is now we have one truth in accounting. So we don't have the vendor and the company have different have have kind of different ledgers, right? Where we are just going to have one ledger that will be immutable, right? And and transparent to all, right? So it's right. So accounting data. So the two things that I always talk about when I'm talking about accounting is relevant, right? And then the data depends on the type of the decision you're going to make, right? But then the most important thing here is the accounting data is reliable, right? Is that we can trust it to be a right the closest representation to economic reality that we can get, right? And the answer to the reliability is the blockchain, right? All right, so here's the definition. And you can see I took this from the National Institute of Standards and Technology. All right, so the blockchains are tamper resistant, so they can never be changed. A blockchain has never been hacked, ever, ever. What people hack is the cloud, so it's the transmission to the cloud that gets hacked. So it's the company that gets hacked, right, as they're moving the data to the cloud, right? But a blockchain by itself, never, ever, which is really a remarkable feature, right? And it's right, and it's tamper resistant, so it's immutable, right? And they're distributed in a distributed ledger. So again, it's like the vendor and the company see the same thing, right? So there's no need here, right, to look for two truths, right? The vendor and the company, there's only one truth, right? So at their basic level, the way this works here, they enable a community of users, and that's the people on the blockchain, right, in the shared ledger, right? So it, under such circumstances that no transaction can ever be changed once it's on the blockchain. So uh, one of the primary goals of a blockchain is to establish the protocols of who can be in the blockchain, right? So go back to my vendor and company example. It's the company that will determine the vendor qualifications that they want to do business with. If they don't meet those qualifications, they can't be on the blockchain, right? So that's what's really cool about it, right? And that's all done automatically, right? Right, and then it's a community that accepts it. So, so, so the company and the vendor can see the history of transactions. No need for reconciliation between, right, between the company and the vendor, right? Because we write the protocols, right? And we actually write IFRS, right? So it's really so it's just really a remarkable thing, right? And then again, right? So and therefore 100% reliable. All right, so here's just an example of how this works. So you can see on the left, it's called the Genesis block. And that starts everything. So again, because I like the vendor and the company kind of the way of looking at things. So the company and the vendor would do a transaction, the first one, and that's the Genesis block, right? So that's the beginning. Every subsequent transaction between those two parties right, will be another block. Okay, and then you can see up top here, right, so you can see up top here, the previous block header hash. So hash is a 26-digit number, and then a nonce it's called, which means nonsense. And so you add 5 or 6 or 7 additional digits or letters onto the 26, right? So the idea here, it's impossible to hack because it takes more computer power than it's worth, right? For a miner to kind of hack, right? Because the vendor, right, can't hack it, right? Right? And the company just accepts. So then you just go through that, and then you have transactions and a header, and then, right? All right. So the building blocks, right, of the blockchain is a shared ledger, a distributed ledger, right? So all participants, which is just the people that need to transact business on the blockchain, right, can view every transaction when completed on the blockchain. Now, the blockchain can also, let's say that you're obviously using your bank account to pay the vendors, right? So that's going to come through. So that's going to come through the bank. Well, the bank just is a feed in the smart contract, right? That's the party between those two, right? So it just is an addition, and it doesn't stop the blockchain. So the bank never sees the transactions between the vendors, just transfers the money the way that it does that, right? Which is they have their own kind of, they have their own cryptography, right? That makes it immutable. All right. So again, the really big deal about blockchain is there's no need for a reconciliation of accounts. Just think about that. That's over, right? Because there's only one truth on the blockchain, and I'll show you that in the later slide, right? So here's cryptography, right? And again, a 26-digit number and letter combinations, and then you add a nonce. And a nonce is again nonsense, but that's added to every transaction, right? So every transaction, which again makes the blockchain immutable, right? And it just saves an enormous amount of labor, right? When one thinks of, right, all of the reconciliations that need to be done in accounting, all the quarter closes, right? All that. I mean, you literally can do that on the blockchain. All right, and then here's the trust system, right? Uh, because business cannot operate without trust, right? And then we use the power of the network, the people on the blockchain, to verify the transactions, right? So everything is transparent, right? And it has to be accepted by both parties, right? So again, the vendor and the company, both of those have to accept it before it gets on the blockchain. So there's no need here, right, to adjust, right? And there's no need to adjust any amount. Again, you have, right, and we'll cover this, but the code on the blockchain is written in such a way, right, that everything has to be agreed to before you can do the transaction. And then what I call the paradox of the blockchain, right, is that since the transactions are immediately available to each party, right, and they have to reach consensus or agree, right? Right? There's no need to trust a central authority, right? So here on the blockchain, right? And it's going to be the company, if it's the vendor and the company, right, is going to write the protocols, right? But once those are written, right, everything on the blockchain needs consensus from the parties, or it can't be on the blockchain, right? So it's kind of a fail-safe type of accounting system, right? All right, so, and now here's an anatomy of a block, right? So then you can kind of see how this all works, I think, a little bit better, right? So again, we have the hash, and then and then you can see, and then you can see that above, right? And then it has and then also has the previous hash, right? So, right? So again, every transaction is one of a kind for all time, right? Right, and then we're going to sign it, right, from the parties, kind of a DocuSign type thing, right? And then it's all taken from the databases, right? So again, the blockchain actually lays on top of ERP, the Enterprise Resource Planning System, which captures every transaction in the company, accounting or not, right? It just actually lays on top and then just pulls from all of the databases that you have in accounting. So it's really quite a remarkable thing, because it just sits right on top, right? And then it just goes and gets them again. You write this smart contract, which we'll cover, right? And then you can see how, right? And then again, because here's the chain now, right? Right. So now we're building the chain here, the 15, the 16, 17, or whatever unique identifier that you want to use, right? And then you can see how this works and everything's chained, right? The blockchain. All right, cool. All right. So here's the polling question number 2.
There it is, just testing your knowledge of what was actually Frank just spoke about. So how much are you paying attention? As I say, we don't make a judgment here, but just
Thank you,
like to
Peter.
provide a little bit of jeopardy where there is none, really. I meant to say at the start of the call, if people have questions for Frank, do feel free just to put them into the chat, where there's going to be time for questions at the end of the session. So I meant to say that at the start. So do feel free. We'll go through them towards the end. Just give you, say, 10 more seconds on the poll. Most people have answered already, I'm pleased to say. Great. 5, 4, 3, 2, 1, and then I'm going to disappear again. Shall I share the results, Frank? I think
All right,
everybody's got it right, if I remember correctly.
Oh, fabulous. Right. Oh my God.
Good
Good.
job, folks.
Good.
I'll stop sharing.
Yeah. All right. So now we're going to talk about the smart contracts. So this is actually how the blockchain operates, right? And then how it enhances, again, the goal of accounting, right, is to provide useful information to make decisions, right? And the two other primary characteristics of accounting allows for feedback and prediction, right? So it's the past and the future. That's what accounting is, right? So this way we can use the past as a, right, as a reliable, 100% reliable, right, in terms of the accounting entered, right? And then we can use that for predictive things to really kind of really do a deep dive into data analytics, right? Which is the rage, I guess, right? All right, so here's what a smart contract is, right? So again, and I took those, and then I took this one from this citation at the beginning here because I thought it was really an apt description. A smart contract is a secure and unstoppable program that represents an agreement that is automatically enforceable. So again, it's kind of at the speed of light, right? So again, just think about the way it is, right? Entry goes to databases, right? And all that kind of thing. But see, on this smart contract, right, it just does it, right? Right? And again, that's on the blockchain. So that's actually the building, right? So here, every account on the income statement and the balance sheet, right, will have their own set of blocks, right? So I always think about, right, the Genesis blocks essentially as the as the as the general ledger, right? And then that comes down, and it's the smart contract that executes it to get on the code. And then what's really cool about smart contracts is they're just a series of if-then statements. So everything in accounting, every transaction is if-then, right? So if this happens, right? So if X happens, then then Y happens, right? Every transaction, right, is if-then. So if this is true, then this has to be true, right? And then so you can write these right here. You can write with smart contracts the right the accounting guidance by the standard setters for every accounting transaction. That means that your books are always in compliance with IFRS. Right? That 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 means you can audit internally and externally the books in a very rapid pace, right? Because everything on the blockchain is immutable, right? So it can't be tampered with, and it represents the one truth, right? So that's just really right. So because again, everything in accounting is if then, right? All right. So it's the agreements, right, and provides assurance to members, right, that adhere to the protocols. Right? All right. So here's the components. So they're automatically executable, right? So they just happen. And 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 again, the beauty about that is there's no data entry errors, right? I mean, if you think about errors in accounting, they're normally done, right, with the data entry, right? That's how they're, right? Because if you start with that, it's going to ripple through your entire accounting information system, right? And it's going to be wrong, right? Well, that can happen with a smart contract, and it's IFRS compliant, right? It's just remarkable, right? And it's enforceable. Now, I put enforceable here. It's actually enforceable by law. uh, right now, the legal stuff in the U.S., is kind of always in flux, right? But it's essentially right an immutable contract between two parties, right? It's deterministic, right? So the accounting transaction, right, in the smart contract always produces the same output for a given input, and it's unstoppable, right? So it's unstoppable. So I kind of like that term actually. All right, so again, the code is just if then. Okay, so take revenue recognition, which is the only worldwide standard in accounting, right? So we have a contract, right? So so the first thing, right, that if X event happens, then execute Y, right? So if there's a contract between the customer and the company, right, then it will execute it onto the second step, which is determining how many performance obligations do we have. Done, right? If then, right? Yes, no, right? So it's really, to me, the beauty of it is you write the code exactly how your mind is basically processing the transaction, right? Uh, right? So, and then you can see how, it's kind of back to my vendor and the company here. And see, you can have all kinds of clauses in this smart contract because it's just if then, right? So they don't pay in 10 days, let's say, then they gotta, right? Then, right? Then we're only gonna pay them 98%. Right? Okay? All right, and here's kind of more of the components here, right? So we have a software, right? A pre-programmed software contract, and that's the smart contract, right? And then everybody see, right, the rules and conditions of the legal agreement. When this specified event occurs, right, then by deploying this smart contract, which is automatic, right, it executes the transaction and puts them on a chain, right? And once the code executes, the value that transfers, right? Again, even if there's a third party involved, right? And this transfer of value, right, is then, that should be, I'm sorry, recorded on the blockchain via the consensus mechanism. So that's how a smart contract works, right? All right, and then here's just an illustration, and you can see the top one, right? That's called a centralized transaction, right? Right. So if you do it like this, I mean, the bank is going to charge a fee, right? It's going to be small, but but they will charge a fee. On the other hand, if it's a decentralized transaction, it's just done between the parties, right? Now, think here. Think about security prices on stock exchanges, right? So the broker, right, or the company that does the actual trade takes out money, right? Well, the blockchain will soon enable the company, right, to basically sell directly to the people that want to buy this stock and do everything, right, just between the company and, right, and the owner or the investor, right, on the blockchain, right? And there's never a dispute. All right, and then here's kind of a little bit more complicated, right? So here's the company bank here, right? So it's kind of like the last one is why I wanted to do this one, right? So here's the company and the bank, and here's the loan amount, right? And all the covenants, right? And that's written into a smart contract, executed, right? Post to the blockchain, right? Uh, okay, and then it's on the network, right? And then all the covenants can be here. This is kind of the additional covenants. Call the loaner, increase the interest rate because of a violation of the covenant, and that will be done in a smart contract, right? I don't know if you heard about the Silicon Valley Bank here, uh, but they obviously didn't have a blockchain, right? Because they would have noticed here, right? Uh, right? Call, right? Right? There's going to be a run on deposits here, right? Because we're upside down, right? In terms of the liquidity that we have here. So all actually because this smart contract will just immediately send you like a flashing red light. All right. So here's the third polling question. All right. Hopefully that was enough time. Thank you. All right. So, oops. Oh, cool. It's actually deterministic. But
So why is it not automatically executable? And sorry, I just realized I was blathering away there running that third poll, and I did not unmute myself. So you've missed all my witty repartee. So
yeah, sure. So the component of the smart contract that always produces the same output for a given input is deterministic. That means it's always a true and known value.
I'll just stop sharing that just now. Frank, just for information, we've got a question in the chat already, which we may as well take now, although you may answer it later, I guess. Well, first of all, Charles was asking, it seems a block can contain one or more transactions, and I think somebody else in the chat has confirmed that. What defines that a block is completed if it is not the completion of a transaction, and what initiates the completion of a block?
Well, it's the completion of the block is, I think on the slide here, when the value is transferred between parties, or so any particular value, right, that's transferred between parties, right. Again, let's take the payment. So debit inventory and credit accounts payable, right? When they both agree, right, that the vendor is going to send the inventory and the company is going to pay him, then that block is completed, right, for that particular transaction. And then what will be added to that block is when the payment goes between parties. So that's when the block is completed, and then you go to the next block.
So in a way that if there's a person behind it, it's the fact that like someone has made that payment basically, and that closes that block basically.
Right, and both parties have to agree, right, to the timing and the amount, again, before that transaction even gets on the blockchain, like inventory and then credit accounts payable. So it can't get on the blockchain, right? Because it can't get on the blockchain because it hasn't followed the protocols, if then, right, in terms of IFRS. So every time you have to make a journal entry for anything, right, you take that transaction until that is complete on the blockchain.
Interesting. I've got another couple of questions coming in already, but I'm going to let you continue on for now, and we'll pick those up towards the end, Frank, if that's all right. Thank you very much.
Thank you. All right. So here's the, you know, here's the slide. So what is the value of a blockchain, right? So again, right, we always need to have trust with third parties. As I'm sure you all know, contracts are interpretable, right? Right? I mean, two people can look at the same thing and disagree as to what it says. See, but that can't happen on the smart contract which gets on the blockchain. You have to agree beforehand that you're going to transact business according to the protocols which are in the smart contract, right? So then we move from trust to third parties to algorithms, right? And we transact directly, right? So, and then we have one version of the truth. That's probably the biggest cost savings that you would have, right? So think about here, every customer, right, that has an account, right, is on the blockchain, and basically each customer has their own block, right? They have their own Genesis block, and then every transaction down, right? So the reconciliation at the end is just merely taking the balance left in accounts receivable, right? Because then you're on a contract to do allowance for uncollectible accounts, and that, right, and that goes in there, and then every transaction between the customer and the company, right? And then from opaque records, right, to instant status track, right, track every historical transaction, right? Right? And then the modifiable, well, they can't, right? It's immutable, and it's called provenance, which is the audit side, right? So we have reliable information here that we can trust, right? So we don't need to really do any auditing with it, right? The big, now auditing firms would somewhat disagree, but I would argue the point again. Here, the whole point of a blockchain, right, is so there's no arguments, essentially, right? Right, and then right, the threat of opportunism, I guess they call that. I think that means fraud, but right. So automatically execute the agreement, right, and high transaction costs. No, see, they're gone, right? That third party comes out, right, and from perimeter security, right, to consensus security, right. So again, if I can go back to the bank example, right. So what the company can do is have the bank transfer money, of course, into their account, right, and then they're the ones that send the money, right, and right, and there's no basic transaction fee between parties, right, and then we have perimeter security. I like, right, right, fault tolerant is a kind of a mathematical thing, and then right, so those are, and they'll cover all those again in the return on investment, right? All right, so here's the accounting and auditing, and I'm just going to cover these slides: the triple entry accounting and the continuous accounting, right? Right, because again, the beauty of this is you can actually audit in real time. So here, if you're IFRS compliant, right? Well, then you just have the audit procedures to prove that, which is already proved because it's IFRS compliant. Done. Audit in real time, right? Which is a wonderful tool, right, for risk management, particularly, right? So here's the slide on triple entry accounting here. So there's a lot to this here. So I'm just going to kind of have you look at this for a little while to kind of orient yourself to it. So this is how the blockchain actually works. So we have a purchase, a payment, sale, and cash collection. And then you can see that all goes to the smart contract. Okay. And then you can see all the accounting here, right between the parties, right? The sale, right? So accounts payable and sales. Okay? And then we have the blocks. Right. Now there is the word accounting token here. The token is just the hashtag. Okay, so that's the token, right? And the token can also be, right, because that hashtag, and it can be denominated in euros, right, or denominated in dollars, right? So everything is a one-to-one, right? Just so you just here, the token means that, right, the hashes indicate to the contract, right, to use the company's currency, right? Right, in their land of domicile, as they say, right? So everybody see how that works here, and then the token, and then everybody see the block, and then everybody see the blockchain accounts. See, because what it is actually, right? It's actually a general ledger, right? Supplier company, right? Customer company here, right? Right, and there's my asset, liability, equity, inventory, accounts payable, right? Cash, accounts payable, right? Customer, and then cash company, right? Okay. So that's the real beauty, right, of the blockchain, is that's why I call it one truth, right? Again, that's every transaction. Now, just a kind of a pause here. In accounting, we make a lot of accounting estimates, right? So we estimate, for example, the allowance for doubtful accounts, right, in accounts receivable. So what you do, right, is probably every quarter, right, you would just have the blockchain run, right, the companies, right, who's, right, or excuse me, the company would run their customer subsidiary ledger, right, and all the accounts past 90 days, let's see, right? And to that, let's take half of those won't pay. Boom, debit credit, right? Now at the end, right, see, that's an adjusting journal entry, right? But that's made, right? So now you can make a determination, right? Because you're the one that has the protocols to get on the blockchain, right? And then you're going to make an entry, right? And then everything is trued up, right? So again, all transactions are on the blockchain, right? And everything just trues up is what I call it. Okay. All right. Cool. All right. So here's the audit continuous assurance. So this is a little bit different here, right? So we have the payment ledger, right? The company's wallet, and then the audit firm. Okay, all of the audit firms essentially are all on blockchain, at least the big four. I don't know about regional firms, but right. So that's on top, right? So again, this is the auditing paradigm now, right? And then we have this smart contract layer. See, because what that's going to do is allow it for continuous auditing, right? So you have the transaction, then you write the audit procedures, right? Right? Which are just the procedures for internal control, right? That's right. That's basically it, right? It's the internal control procedures that make financial reporting reliable, right? Now it's really reliable, right? Um, because again, everything on there is immutable, right? So, right, and so then we have that, right? And then we have continuous control monitoring. So again, because that's on the blockchain, the audit part, right, next to the accounting part, right, right, and again, the auditing layer will have here. Just let me go back. Will have everything that you see on the right hand side, right? So all of the accounts in the general ledger, all of them, right? It's just kind of a parallel, right? And so when they're GAAP compliant, right, it goes over to basically audit, right? And then you automatically execute those procedures. Done, right? So it's a terrific risk management tool. It's just, you know, it's just really incredibly cool, right? You know, because, you know, we've been waiting, you know, I mean, I've been an auditor for a long time. Um, you know, I have a practice on the side. And I mean, this is just like a godsend, right? I mean, it's just so cool. We're finally the accountants and the finance, right? Or the accountants can finally have a seat at that table, we call it, right? Right? Because you control the data is reliable, right? Okay, let's get going, right? So it's really cool, right? And we can continuously monitor the risk, right? So every single time the transaction doesn't follow the exact procedure for some reason, right? Because, right, then we we get a red flag, right? Right? It's kind of like a right. It'll be like a flashing light, right? Well, then your audit data analytics here just really explodes, right? Because now you can basically do anything and you can really help people, right? Here, you can manage risks as they're occurring. Most of the time, you have to wait till after, right? Now you can do it during or even before, right? Which is better, right? A preventive control, right? Right, and then you can see all the layer below that, right, is your blockchain, right? Whoops, excuse me, and that's all here with the triple entry that we had before, right? So it's just really cool. Is all I can say, I guess. All right, so here's my return on investment calculation. So I have algorithms, right, that are IFRS, right, and then the International Accounting Standards Board compliant, right? So when you do a quarter close, right, there's a lot of adjusting journal entries that you need to make, right? That workload, right, is really cut down, right? Because again, here in accounting, if we in data analytics, right, about 80% of the work is extract, transform, and load. Right? That's about 80% of the work, right? That's now down to probably about 5 or 10%, right? Because they're basically algorithms, right? That run, and you can put in those algorithms really your company policies on on depreciation, amortization, classification of accounts. I mean, your whole entire, right? I mean, right, your whole entire accounting policy system or the whole entire accounting information system, right? And then again, the one truth, right? No reconciliations are needed when preparing, right, quarterly financial statements, right? Because again, you can, right, in the smart contracts, right? You can write the accounting transaction, right? And then you can have almost a near zero closing, right? I was just reading an article about that. That's been the nirvana, right? Right, where you have a zero close, right? In other words, the books close themselves, right? Just think about how cool that would be, right? So the books close themselves, right? Again, it moves accounting, right, into really a consulting role, right? From kind of a numbers perspective, I, I guess you would say, right? All right, so there's no risk of altering accounting records. So just think about the fraud risk, right? Again, you can't get on the blockchain, right, unless you agree to the protocols, right? The right and the protocols are in this smart contract, right? Or else you don't get on, right? I mean, you cannot propose a transaction on the blockchain, right, unless you adhere to the protocols that are written in the smart contract, right? Right, and then the smart contracts automatically execute, right? So just right, enormous labor savings because they just remove the risk kind of the data entry, right? Again, it's similar to right. It's similar to extract, transform, load, right? Well, see, that problem goes away, right? And the value add for the company, right, is the employees now, right, can really use their accounting and finance skills here, right, to manage the firm, right, to produce, right, a positive outcome, whatever that outcome is, although it's generally to increase the operating profit. All right. So I think I'll stop share. Is that right, Peter?
That's right. If you could just go to
Okay.
the next slide.
Oh, hello, everybody.
If you can keep sharing again, Frank, because we need to go to the
Okay.
next slide. Well, thank you very much, Frank, while you're finding how to share that again. Gosh, you got to love how much you love blockchain. It really comes across. That's super. Just before we get into the questions, you don't think you're getting a free webinar without a bit of a plug at the end of it. And some people do the plug at the end, the beginning, so you're lucky here. So if, okay, if you're, you're still sharing your screen, Frank.
Yep, I'm trying.
Okay, actually, you know what?
What? No, I got it.
Okay. Yes, we've got a couple of blockchain courses which Frank is going to be instructing on. One is in New York towards the end of May, and the other is virtual classroom. Can you go to the next slide, Frank?
Yep.
Super. Yes, and the virtual classroom one is at the beginning of June, essentially. And in fact, we've put links into the chat, so you've got direct links to those pages so you can find out more about the courses and the email address there if you want to talk to our team about this course or indeed any other course that we offer, plenty on IFRS and ESG and various other topics. Now, let's get to some questions because we've got a few in here, Frank. So one that I didn't get to previously from Matt. Good to see you, Matt. Hello. Is the blockchain by definition fully publicly visible? Won't this risk exposing proprietary data for competitive reasons I may not want to?
Okay.
So is it publicly visible?
Sure. The only blockchain that's publicly visible is when you're trading like Bitcoin, right? So actually in that paper that he wrote, or whoever that person is, right? He actually wrote, see, because Bitcoin doesn't work without the blockchain. So the real, right? So the real usefulness of that is the blockchain, right? But it's not public information because you can, right? So these are private permissioned blockchains. And sorry, I should have mentioned that.
Yes,
Right?
no, it's interesting.
Permission, right? No one else no one else can see it but you and whoever else you want to. Private permission.
And Kevin's asking, are the payments still routed through the traditional banking system or through some other mechanism? Do the payments just work in the same way?
Yeah, the payments work in the same way. The advantage is you could have the bank transfer money to the company, and then it's just between the company and the vendor. So it goes direct, right? Because here, anytime you have a third party involved, right, that's outside of the blockchain, right, that can be a little bit of a problem, right, because they're gonna have like a bank. It's called the Oracle problem, actually. So in the longer seminar, I would cover how to do that. But essentially, what happens, right, is that the Oracle problem. So that's written into this. So that's written into the smart contract, right? So that we're going to use an intermediary, a bank, or else I think the best way to do it is just to have them transfer cash and then everything comes out of your account. So
you've mentioned the smart contract a few times. It sounds like the legals of the agreement, etc., they're encoded, and it sounded like it was programming code almost. It sounded quite technical. So who's doing this? I mean, can accountants do this and it's software that's setting it up and the code's written behind the scenes, or how do people interact with that?
Yeah, most companies buy the blockchain software. There's hundreds and hundreds of vendors now, right? And you normally get an accounting one that basically has had experience, right? And then what you do is you take your IFRS guidance, right? And then you write those out as if then statements,
Mm.
and then that software code, right? Or the blockchain will turn that into a will basically turn that into a smart contract, essentially.
Yeah. So you, as an accountant, you're just needing to worry about the technical aspect of accountancy, not the technical aspect of digital accounting, the mechanics
Absolutely.
of how it works.
Right.
Okay.
Yeah, but but I just did those slides because you have to know a little bit about what's kind of going on.
Yeah.
Right.
You.
No, but it doesn't have to be more complicated than that, right? The software code will be written for you, essentially,
Yeah.
by blockchain, right? Because the blockchain will obviously have the capability of writing smart contracts.
Actually, I realize I have more questions about how that works, but I'm going to leave that bit of it. But we've got one last question in from Kevin.
Okay.
And I was actually wondering about this as well, because just the way that you said it before. So Kevin's saying, am I correct in assuming that in order for a particular company to implement blockchain, then all of the customers and suppliers that they use would also have to be on that company's blockchain, or would those customers and suppliers need to also have their own personal blockchains? Blah, blah, blah. How does that all work?
Yeah, they would. Well, I mean, they would need to have blockchain so that they could actually see the transaction, essentially, right? So that's true.
So, because so companies must have to deal with other companies that aren't dealing with blockchain. So, do they have to have two separate systems going on while adoption is not so great, or what do you think?
Well, the company, right, can basically with IT thing, could basically alter the blockchain, right, so that for a vendor to get on your blockchain, right, they have to agree to your blockchain protocols before you'll do business with them. right? So, and then they can always refer to that, or right, or you could send them something, right? But it doesn't impede, right? You're doing the blockchain, right?
That's what I was wondering. Yeah.
Right, because again, because you just build that into this smart contract, and then you could just have a line say, "Well, send them an email to this address," right? Boom, done.
As you could probably tell, I could blather on about this for a bit longer, but we've actually reached the top of the hour, and thanks for everybody's indulgence. We've gone a couple of minutes over, but Frank, I'd really like to thank you for presenting,
Yeah,
and
sure.
I'd really like to thank everybody for attending and giving us your questions. We will be in contact after this. We'll send a link out to the webinar recording. You'll have noticed that we're recording it. So I hope you've enjoyed, and we hope to see you on one of our courses. Thank you, everybody.